Hello everyone, this is Nick Perry with your chart slideshow for Wednesday, October 25th. Today I am back with my weekly check of the broad market indices. As you can probably tell, I am still struggling with a head cold of some sort, but hopefully that won't present a problem and at least give me 3 or 4 minutes to get this recorded. When we looked at last week's charts, we were discussing this sort of stair-step pattern that's been in place in the broad market indices. The indices have just basically been moving straight up, so each week I come in and pretty much offer the same thing, that the uptrends remain intact. So the other point I made last week was that the indices were a bit extended, but noted that hadn't hampered the progress so far. When we turn to this week's charts, we see that the uptrends are still in place. The SPX just continues this steady stair-step ascent. Same with the Dow. The rut, as we talked about, had kind of done a little bit of a dip, but moved up. Now we see a little bit of a pullback, and today it's kind of heading higher. And the comp, it's been moving straight higher too. The new addition here to the comp chart is this red line, as you can see right here. That's drawn off of the April highs, April of this year. That's not shown on the chart, but I went ahead and extended this line out just to keep that in mind. Those highs may offer a little bit of resistance here. Given the uptrends, I wouldn't say it'd be enough to halt that uptrend, but it may offer a bit of resistance, and it's something to keep in mind. So as they stand right now, the charts aren't offering a whole lot that's different. The uptrends are still intact. We've got support that we're a bit extended from. The green line is, of course, the 50-day moving average. The indices have pulled away from those averages, from its average. So, if we do see a pullback, we've got some room to drop without really breaking these uptrends. So that's something to keep in mind. And of course, we have the Fed coming out in roughly an hour and a half, 2 hours, something like that here with their announcement. It's expected that they're not going to raise rates, so it'll be interesting to see if there's really any reaction after that. Just looks like some people may be sort of sitting on the sidelines today. The action's a bit light. We're in the middle of earnings season, so that has the potential to sort of influence things. One of the interesting things is that, unlike years past, it seems, the earnings, we don't really have bellwether stocks anymore. Some people may disagree with me on that, but what I'm talking about are the stocks where the earnings come out and it just drives everything. We've seen some misses and some blow-ups, and we've seen some stocks react, gap up and react positively to earnings, but it doesn't seem like there's been, a situation where it's just driving everything. So, maybe something just hasn't come along yet, but it seems like we're sort of missing that. So right now it just feels like the action is sort of stock by stock. As far as what does that mean going forward, to me it signals that I don't know how much of a catalyst earnings are going to be. The broad market action seems to be very steady. It seems like buyers they just keep trickling in, and any small pullback seems to get bought. If we do see something that causes, a larger pullback, we do have support underneath, and it'll be interesting to see, how the buyers respond. But again, based on the charts and what we're seeing right now, I don't see much in the way to derail the current uptrends. But as always, stay tuned to the blog for further updates.